Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key level for both the indices. We'll also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade yesterday, the frontline indices opened flat and faced profit booking at higher levels, leading to Nifty retesting 20,900 while Bank Nifty testing the levels of 47,100, closing 0.5% negative respectively for the day. Coming to the macro factors, the dollar index has stabilized around 104 levels while the US 10-year treasury bond yields are trading with a weak footing around 4.2%, which is a positive from a liquidity perspective. There has been significant rush of liquidity towards equity markets, both global and Indian. Also, Brent crude oil prices remain weak, currently quoting $74-75 a barrel, which is a big positive from an oil importing economy like India. The current trend in Brent crude suggests that it could further dip towards levels of $71-69 a barrel. Overall, the global factors are lining in favor of the Indian equity markets. A quick check on the global markets. Post the consolidation from the past 2 weeks, the S&P 500 is finally stabilizing above its short-term resistance zone of 4,570, 4,600 ahead of the Fed policy, and is gradually heading towards the levels of 4,710, 4,740 on the upside from a short-term perspective. All eyes would be on the upcoming monetary policy announcement by the US Fed tonight, impact of which will be known tomorrow morning from an Indian context. Coming to the Indian market Nifty levels, that is, Nifty has ended the day with a cut of 0.5% yesterday. Last few days we have cautioned over the overbought nature of RSI indicator and deteriorating advanced decline ratio over the past few sessions. This is not a shorting signal in an otherwise bull market, but definitely it's a sign of caution for the coming few sessions from a short term perspective. Going forward till 20,810, 20,830, this is likely to act as the support zone. Until this zone hold, the index could witness a rebound towards 20,980, 20,000, 21,020 levels. While on the downside for the day, below the levels of 20,820, index can retest the support, positional support placed at 20,750 levels. So that's from a positional perspective. 20,750 would be the positional support. Coming to the OI data, significant call writing build-up is witnessed in 20,000, 20,950, 21,000 strikes, while on the put front 20,900, 20,850, 20,800 witnessed considerable open interest addition. Overall range for the day could be 20,750 on the downside and 21,017 on the upside. Coming to Bank Nifty formed a bearish engulfing candlestick pattern and ended yesterday's session on a negative note, down 0.5% below the level of 47,100. The immediate support for Bank Nifty is likely to be the zone of 46,800, 46,850, while the immediate resistance is placed at 47,230, 47,290. In case 46,800 breaks, the index can retest its next support placed at 46,610, 46,530 levels. From an OI perspective, that is for Bank Nifty, significant open interest build-up is currently witnessed in 47,000, 46,900, 46,800 puts, while on the call side it is seen in 47,300, 47,400 calls, implying a near-term broad range of 46,750 on the downside and 47,450 on the upside for the banking index. Now coming to stocks and sectors in momentum, insurance stocks saw decent build up on the long side in trade yesterday, with the likes of HDFC Life and ICICI Pru gathering excellent momentum from the F&O space, while LIC, GIC RE, NIACL from the cash segment too witnessed good traction. Metal stocks were shining in trade yesterday, with the likes of Jindal Steel, JSW Steel and Wellcorp witnessing strong outperformance in the past few sessions, and this could further strengthen from here on too. From the broader market, bullish setup was observed in the likes of Ultra Chemco, TCS, Polycab, Bajaj Auto, Canara Bank, Union Bank, PNB, ACC, Tata Elxsi, LTTS and Hudco. Having a look at the FI DI data, in the cash segment, FI is bought to the tune of 77 crores, while DI is added to the tune of 1923 crores. FI long short ratio for index futures has improved to 59.5% as they added 17,000 index future long positions. On the stock futures front, FIs have bought to the tune of 13,000 contracts, while on the options front, FIs added 18,300 call contracts and 15,800 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.